When you invest into real estate, residential or commercial, there's something called depreciation schedule, meaning the building is getting old. There's depreciation every year, and that depreciation you can get to write off from the rental income. What's the schedule? For residential, that's about 27 years. For commercial, it's about close to 39 years. So, for example, commercial 39-year depreciation schedule around close to 2.5% per year. Let's say property value is 1 million. It's about close to $20,000 ballpark. You're getting depreciation, regular depreciation from the property. And if a rental income coming up to $20,000, you can get to write off. Simple math. Now, this depreciation schedule is up to you. If you want certain aspect of this property, excluding land, for example, if you have equipments, or if you did paintings, if you did a major construction, you can get to depreciate equipments and different aspects of this building. You can depreciate faster, bring it down to up to 5 years. And whatever you bring it down up to 5 years, you can get to write off immediately first year from the rental income you collect. So basically, if the property is owned by LLC, that LLC becomes negative. So the whole idea is called advanced depreciation. So the 39-year depreciation, most of it, you can actually do it, certain aspect of the building in one go. What's the advantage of it? The advantage of it that any rental income the property generate, you can get to write off. You don't pay any taxes in it. So for example, recently I sat down with a client in Texas. Client has a surgical center, bought it close to about 2 million, did a major construction. We sat down with a cost segregation person, and we were able to get almost in the range of close to $500,000 advanced depreciation. So any rental income up to $500,000, the client will pay any taxes. But there's a problem though. The problem is that the property cost basis does go down. So if you sell the property very quickly, you have to recapture the depreciation. So if you want to hold a property for a long period of time, at least 5 to 10 years, you're not looking to sell it right away, and you're in a high tax bracket right now, you want to save the taxes, cost segregation does make sense. And it involves a person who does the valuation of the building and do the cost segregation. And it costs money between $4,000 to $7,000, depending on the price of the building. So it does make sense to do cost segregation if you're in a high tax bracket and if you have a lot of passive income coming in. It does make sense to do it. One more thing to do that people are concerned, hey, my cost basis goes down. When I sell the property, I have to pay a lot of taxes, right? Yes, at that time you can do something called a 1031 exchange. If you do a 1031 exchange, then you don't have to worry about the tax get deferred as well. So this is one way of looking into it. So yes, cost segregation does make sense depending on your situation. If you have a lot of rental income coming, you want to hold the property for long term, not short term, and you want to have the tax write-off right now, cost segregation could be a good method to lower your overall tax burden. Speak to your financial advisor and a CPA if it makes sense for you. And feel free to give us a call. We can help you in your overall financial planning needs. Thank you.